Hello, welcome to WINFX Trading YouTube channel. I have not uploaded video for a long time now due to the fact that I look at the problems, I look at the losses, I look at the situation in the market and ask myself one question: what is it that makes people lose and blow their account? Then I have to go through a lot of researches and develop a lot of tips and get a lot of psychological ideas that will help you combat that. Okay. Before I continue, if this is your first time of visiting this channel, make sure you do your best to subscribe. Turn on that subscription button, turn on the bell notification so you get notified each time I upload new content. And make sure you share this video to your friends, to your network, to your groups, your WhatsApp, your Facebook groups, and all of that, so that YouTube will push you to a very huge level of audience. Okay. Also comment what you view about this video. Comment your country, so I'm gonna do my best to help you. Depending on the asset you like trading, we actually educate people on this forex, synthetic, and stock market, even crypto market. Okay, so right here, before I jump into the main topic, I offer a number of courses ranging from the forex margin trading course to synthetic margin trading course and other specialized courses like Volatility 75 millionaire course, a boom and crash millionaire course, jump index millionaire course. Okay, each course is okay to make you a millionaire plus or billionaire, if you really want to be committed to forex market or synthetic market. All you need to do is to join my Telegram channel, chat me on Telegram, and comment what you want, and message me that I want to learn or I want to join VIP signal group. Anything you are doing, we are making it really for profit. If you join VIP signal group or channel, we are making profit because I have group, I have channel. Okay, it depends on what we are buying. We have a lot of products. We have a VIP top group where we take $1 to $11,000 plus. In a couple of 14 days, we have a VIP WFS profitable signal channel. It's just a channel. Then we provide signal multi-level assets, synthetic forex, cryptos. When I say synthetic, V75, boom and crash, and all of that, the forex currency pays good signal. Nasdaq, like US 100, all those indices, US 30, US 200, 500, that's S&P. So you should take action. Just one thing, you are okay. You don't need to be doing many things. Just select, if it is a course you're applying, select one course. Go to the description of the video, you see the course list, select one. Once you follow the course up, you'll reach. Simple. And then if you want to join VIP, then you can join all the VIP to increase your profits. You can join the VIP drop group where we take $1 to $11,000 plus in 14 days. You can join WFS profitable signal channel for margin signals like on forex, on good, synthetic markets like Volatility 75, Volatility 100 index. There are other counterparts. Okay, boom and crash signal also involved, is included in the WFS profitable signal channels. We also have another group, boom and crash. There is a specialized group called boom and crash group. Just only boom and crash signal you'll be seeing there. So right here we are talking about price level delay theory as a function of random number, not candlestick patterns. Now I want to explain this carefully to you. I'm going to be using Volatility 75 index. So I'm going to use 1 minute time frame, because in 1 minute time frame we can actually understand the market. Okay, we can understand the market. I'll be using 1 minute time. I will be using lower time frame so you understand what I mean. I'll use 1 minute, 5 minutes, 15 minutes. Okay, now Let me start with 15 minutes. I'll go down to 5 minutes. We say that pricing levels with the topic. We say that the topic is pricing levels delay theory as a function of random number and not candlestick pattern. It is a very complicated topic, but I'm going to simplify it here. Okay. You see, I'm going to simplify it here. What is a candle? That's the question. What is a candle? What is a candle? Yeah. What is a candle in the financial industry? You see, this is a candle. This is a bullish candle, and the red one is bearish candle. The bullish candle open. Are you getting it? It open low at a low price. This is the opening price. Let me show you. This is the opening price. This is the opening price. 981,631. But when this candle open, it falls to this level, to this price, to form a wick by the sellers. Sellers has to push it down, and then they bring it back here, and then buyers take over and have the highest dominance in the market, over 80%, and they bring the price here. They bring the price here, form a wick by seller, pushing it down here, and then it finally closes here. This is the closing price. We call it the closing price. This is closing price here, about 987,000 plus, and this is the opening price. So a bullish candle opens at a low price and closes at a high price, while a bearish candle opens at a high price and closes at a low price. Some strategic probabilistic traders actually use this strategy to make millions of billions of dollars, even trillions of dollars in the forex market. They know how to predict a candle. Instead of predicting the randomness in the market or the random number that predict the candle, they actually predict the candle by following the historical patterns. But let me just get it done to give you the right knowledge here. Okay, this is 15 minutes time frame. Okay, you already know what is bearish and bullish candle right here. Now, what I will bring here is a swing theory. A market moves in cycle. But remember the topic before I continue. Remember the topic: pricing levels delay theory as a function of random number and not candlestick pattern. Now, when I say pricing levels, I mean swing levels. And then when I talk about delay, I mean how long we when a price leave a particular level to another level, how long will it stay within the vicinity of that level, within the vicinity of that price range before it hits the previous swing level where it actually reverses? What determines it? What controls it? So that's what I want to explain. So you see what is happening here. You see, this is a swing level. And that is what we call pricing level. When I say pricing, you are making decision like, should I buy? Should I stay away? Should I sell? Should I stay away? That is pricing. You are pricing the market. If I buy this market at this price, will the price fall? That means if it falls, you lose. If I sell this market at this level, will the price rise? That means if it rises, you lose. Okay, if you are buying a market, you are actually believing that this market will go up or appreciate in price in real time after some time, And if you are selling the market, you are actually predicting the market to go down, to fall in price in real time. Are you getting it? So the topic, I keep repeating it. You need to understand this topic. I didn't have much short notes, but the topic, I'm already professional in this area. Pricing level delay theory as a function of random number and not candlestick patterns. There are a lot of candlestick patterns, that is what I'm not going to be explaining, but at least I will highlight it a little bit. There are let me show you some candlestick patterns. Okay, this is the short recap of the candlestick pattern. You see, this is bearish, this one, this is bearish. Okay, so these are, we have bearish harmony, we have bearish harmony cuts, we have dark cloud cover. Okay, so you see, this is bearish harmony, this is a bearish harmony course here, this is dark cloud cover, this is engulfing bearish, this is evening dodgy star. You see it, evening dodgy star. This is, you see those arrow, that shows you where the market will probably, nobody is sure, but probably, like, probably it's probably, market is probabilistic. Like those arrow you see shows where they will probably tend to after such pattern has been created, again after the politics has been instantiated. So you see this one, this is evening window star. You see, this is evening window star, this one, this is I'm sorry, this is evening star here, this is gravestone dodgy here, this one, gravestone dodgy. Then remember, the names are just below them, just the name are just below them. These ones, the name are just below. Okay, I'm sorry, on top. This one's the name's on top, this one the name is on top, it's not below, I'm sorry. So this one, the name is on top. So this one, separating line bearish, you see, evening window star, you see, bullish zodiac, you see, inverted hammer, you see. Then here, shooting star, this is a shooting star, you see, long upper shadow, you see, tweezer tops hanging out. You see, all these things are just jargons. Even most profitable trader, successful trader, don't actually know what all these things is, what they are. They are just terminology. If you know the theory of pricing, the pricing level theory, the psychology behind the pricing level theory, and the delay theory, like the delay, that is pricing, that is delay. We talk about two major things: pricing, delay. Here, then we actually need to use random number and candlestick to know how, like, to know the truth about them. So you see, all this, no matter how you read this candlestick pattern and all of that, they are not going to make you successful. Yes. Why? What actually for this candlestick is they are just graph. There is something that produce, that generate them. There is something that say, oh, this is going to be the opening price, this is going to be the closing price, this is going to, okay, there is something that determines, we are going to make sure that this candle has a very long upper wick, this candle have a very long lower wick, or this candle just have any wick of any dimension. That is a secret behind it, and that is random number generator. Yes, you see, random number generator. So I'm going to take you to what I mean by, now look at what it is here. Random number generator. A random number generator is a hardware device or a software algorithm, you see it, that generates a number that is taken from limited or unlimited distribution. So my concern is unlimited. We don't need limited, because synthetic market, even forex market, is continuous function of time. Those prices we are seeing on the chart, they are there is no discontinuity. Even though for you don't trade forex in the weekend, Saturdays and Sundays, does not make it purely discontinuous. Okay, it's just a kind of break. It's when it comes to synthetic market, which is all 247, like that one is purely unlimited. I see. So you are picking a number from infinite set of other numbers using a particular algorithm. Okay, you see. So this going to the mathematical implication of this, I will not go too far, but professionally, random number is subject to astronomical timing. Like it's subject to, they use the rotation of the earth. Let me just open your eye so you understand it. Okay, you see, I've gotten the fact here. See, random number generators that do not rely on a real world phenomena to produce their streams, are referred to as pseudo random number generators. These generators appear to produce random sequences to anyone who does not know the secret initial value. Yes, because if you know the secret initial value, you can be able to predict the system. In a minimalistic generator, the initial value will be the only time entropy is introduced into the system. The entropy here means a kind of disturbance. Okay, so unlike two random number generators that convert entropy sources directly into sequences, like they convert those disturbances, like oscillation and all of that, into a sequence. Okay, a pseudo random need to find an entropy to use to keep itself unpredictable. Like it needs an entropy. Okay, so classic tactics for accomplishing this include taking the time of the day. That is where I'm concerned. They use the time of the day, the variation in time of the day. So when you see the price is here, let's say volatility 75 index is at $800,000. Next time you see it at $900,000. Next time you see it at $1 million. That is not just happening like that. These are code that have been written. You don't know the entropy, the initial entropy. They keep the sequence repeating itself using unknown or a hidden entropy. A hidden entropy. The entropy there means initial value. That must be initial value. Then they will now use, there is a mathematical equation which I will not bring. They will not commutate that mathematical function with the initial value, so that that function will work on the initial value to produce various values that you can never predict, because you don't know the initial value and you don't know the entropy there is seed. You can call it a seed or initial value. You don't know the initial value and you don't know the random function which is actually using the time of the day. You see, another one is say they use they use the time of the day, the location of the mouse, the activity on the keyboard. So all the location of the mouse and time of the day, no, it's not what I'm going to be talking. I'm talking about time of the day. They use the rotation of the earth, because rotation of the earth actually produces time. So that type of random number, or what you call pseudo random number generators, that is what is used on the synthetic and forex market. So even though the market is subject to demand and supply, the random number generator actually senses that demand and supply in the market and also respond accordingly. So the major thing there is the random number. What controls the market is the random number. I will not be talking much on this topic, but what I will do now is I have to take you to the. I've shown you a lot of candlestick patterns, engulfing candlestick, morning star, evening star, and all of that. You see, all those things are, they are nothing, because what actually say that this is opening price, this is closing price, what actually say that is the random number. Okay, it is depend on the time of the day. You see, don't think that Deriv is foolish. The designer of the app, the designer of the Deriv website, and the designer of their assets, the chart, before they launch it in the MT5, someone designed this and incorporated in MT5. They use this pseudo random number generator that depends on the time of the day. That's why at different days the market behave differently. Demand and supply is being controlled by the random number, because the random number have to sense that there is pump, like the buyers are strong, so let us behave accordingly, let us make the price go high, it will be going high. Then when the random number function, I will not be going deep into the mathematical aspect of driving the formulas and showing you. You don't need it. What you need is to build your mind, understand that this thing exists, and then you now use strategic approach to make your signal, to produce your trading signals. I'm going to show you what I mean towards the end of the video. You see, when the random number detects that there is high supply in the market, there is more sellers, people are selling heavily, the random number generator will actually generate numbers that will be pulling the price down. All this number you are seeing here is generated. It's not that it's generated by a system that you can't know. That's why you will not be able to produce, make profit in this market if you have not understood this. You see all this number. Let me show you this number that are generated. The number you see here today may not be the one you see tomorrow. The number you see a minute ago may not be the number you see the next 1 hour. You see, so that is the random number theory. Now, what do I mean by delay? What do I mean by delay? This idea will actually help binary traders and also help a forex trader, because when you place a trade, for instance, you buy, what makes you an expert trader is if that trade start making profit in a fewer time, like let's say in less than 1 hour, is already in profit in less than 1 hour. That means you are good. But when you place a trade and is in loss for days or for several hours, is in loss, let's say 4 hours, 10 hours, is still in loss, and the loss keep increasing, as number of days goes. That is the idea of delay theory. If see how delay theory behave. If you cannot understand, if you cannot price the market well by understanding that this is random, this market is random, by understanding that there is demand and supply levels, there is swing level where market will change direction. If you can't understand those things, you just place a trade wrongly. Once you place a trade wrongly, they are going to delay you. The randomness of the market will actually give you profit, but they are going to delay you for a long time. And what it means is that if your equity is going to be small, and depending on your position sizing, your lot sizes and number of positions you are going to be cut off on the market, because the randomness is not in your favor. Okay, so how do you solve this problem? How do you solve the randomness problem? And how do you solve the delay problem? You have to solve this problem by psychologically placing trade at fixed, real, and true. Like it should be real. It should not be something you are just doubting. It should be real, fixed, real, but true swing levels. When I mean swing level, demand and supply level. You see, if you buy here, look at this. Let me just rotate the screen so that you understand what I mean. This is a very serious subject you should know. You see, Look at this. You know that this market, just look at the history. You need to know the history, the randomness in the past. The market is going, has been going down, meaning that you don't need anyone to tell you that suppliers are higher than the buy. Supply is higher than demand. People that are in supply, people that are selling, are higher than people that are buying. That's why the price is down, and the random number have to respond to that. Now, in this market, what should you be looking for? You look for strong, based on you have known the politics, the what the random number is doing, because don't think they say they used to manipulate market. Don't think it's always like that, because the web design, the app developer, the trading app developers, and the designer of trading website, they just do everything and leave it. It's run on itself. They use the pseudo number generator to predict the number, the price number that will appear. So don't always think that they will, after some time, they will come change some things in the program, in the software. No, it's not always like that. This has been modeled mathematically. Mathematics can do everything. You know, we are in a software age, so don't think someone will program an app and every time it will be manipulating the app. No, it's not like that. This it's just that you don't know this entropy, you don't know the initial value, you don't know the seed value that they use, and you don't know the nature of the random function that work on the seed value to produce a particular number in future. That is what you don't know. Okay, so you see, as a expert trader, you look for the supply levels, and it should not be anyhow. You see, this is a supply level, this is a supply level, but a wise trader will look for a supply level here, because here is where it was strongest. For the price at this level to get down to here, it means that there is a strong force here, and the random number has to replicate it. And for the fact that market is quadratic in nature, if something happened in the past, it will repeat itself at that same level. Like as it sold here, see what happened when price get back to that level. Let's see what happened. That it will take you a lot of time, but once you patiently wait, you are going to make profit. Okay, price have not came back to that level, but I'm telling you the truth. Any day that price came back to this level, this this line, this light, I don't know, let's call it a kind of brown, or a kind of, let the color, let me change the color to something you understand, because the color is something confusing here. Yellow, this is yellow color. Anytime the market gets to that price, it's going to sell massively. At least 50% of the distance is sold before. 50%, imagine. Do you know what I mean by 50%? Look at this, half. If you sold here now, we are going to at least half distance. You have made 70,000 pips. One lot size, you have made $70,000. But it will take you time to get this signal. You see, that's where patience become very, very important. You see, that is where patience become very, very important. You see, so you can see, since supply has taken over the market, you can see there are other mini supplies. Here is a supply zone. You can sell, you see. But if you don't know the theory of randomness in the market, you will not understand why the market is doing what it's doing. And you keep doing your account. A lot of people will be buying and they will make some profit, but in the long run, they will blow the account, because you are trading against the politics, the psychology behind the random number generator software or function. Thank you. I'll be ending this video. I will not go too far. Ending this video. This is a free content. If you really want to know how to trade as a pro, as a professional, knowing how to place your TP and your stop loss, and getting a good trade out will not lead to triggering your stop loss, but triggering your take profit. You want to become rich and you're successfully trading this market, like you become a millionaire, billionaire, trillionaire plus. It's possible. All this thing is dream. anything you dream about. You think in forex or synthetic market, your lot size is just what you are seeing. The more your equity increase, the more the system upgrade your lot size. That is the point. In this volatility 75 index, that is the level you will reach. You can use up to 10 lot size. You see, so imagine you use 10 lot size and you gain 70,000 pips. That is $700,000. Imagine, and you keep making this kind of money over and over again. If you want to get to that level, enroll for my courses. Check down the description of the video and start changing your life. Bye for now.